assessment of the global economy and the U.S. economy is, I think the U.S. is going into a recession. Europe probably already is in there. China is doing the best to, I think the technical economic term is screw their economy up.
Welcome to Wealthion. I'm Wealthion founder Adam Taggart. Today, we speak with one of the most well-connected economic networkers I know, John Mauldin. John has published his own macroeconomic analysis for decades in his widely read Thoughts From the Frontline newsletter, which in the process of doing his research for, brings him into contact with the people at the very top who run our financial and political systems. I'm talking about CEOs of the largest companies, managers of the largest institutional funds, Secretaries of State, Federal Reserve economists, and the world's top think tanks. I love talking with John because he's a walking, talking Cliff Notes guide to what all these top experts are thinking right now. And given the fast rising uncertainty of today's world, being able to tap the collective wisdom of that brain trust is especially valuable. John's also bringing together a stellar collection of that brain trust, over 50 of these experts, I believe, at his online strategic investment conference, which is coming up in 2 weeks. I'll ask him to let us know how we can learn more about attending that in this interview, but first, I want to dive deep with him into the macro outlook. John, thanks so much for joining us today from your office in Puerto Rico, no less.
Adam, it's always good to be with you. And I was especially entranced with your interview of Barry Kitt recently when you were talking about the big gold nuggets. I've actually been with him in those rooms, picking those nuggets up just like you have. And that is just like, what an experience.
Oh, it's a magical experience, except for the fear you have of dropping this incredibly heavy, priceless artifact on the floor.
Yes, don't do that.
and folks, if you're not entirely certain about what we're talking about here, John's referring to the video I published about 2 months ago, where I went to Barry Kitt's. He owns 2 of the largest gold nuggets in the world. I think it's the number 2 and the number 5 in terms of overall size. Yeah. And if you haven't seen that video, folks, I'll put up a link to it right here, so you can go watch it after this video. It's really pretty fascinating. Well, John, let's jump right in here. I want to really dig into your macro outlook, given what a highly experienced macro analyst you are. I want to do that first. But then I want to leave some time to learn more about your upcoming conference in May. The Strategic Investment Conference, really, in my mind, is sort of the gold standard event for these sort of macro conferences. And I know you've got just a huge and unbelievably qualified all-star roster this year. So I want to leave time to get into that. But let's start off with a question I like to ask all my guests at the beginning, which is, John, what is your current assessment of the global economy and financial markets?
Well, you started off with the gloom and doom, right? And I want to presage this, Adam, but I'm the most optimistic man in the room. I am really long humanity. I think technology and biotech especially is going to take us into the 30s with an enormous boom. In the meantime, I'm kind of short government. Okay, I'm bearish government. And so, yes, my assessment of the global economy and the U.S. economy is, I think the U.S. is going into a recession. Europe probably already is in there. China is doing the best to, I think the technical economic term is screw their economy up. With this, Gavkal came up with this wonderful chart that 83 out of the top 100 cities in China are in one form or another in a lockdown, from like phase 1 to, where we have in Shanghai, it's doomsday. This is a global recession. And then you throw in Ukraine and Russia, all the food shortages we're going to have. I mean, if you're following me on Twitter, I'm linking to and liking all of the food shortages. I think when you see country after country rioting, I mean, in places that you're going, why are they rioting? These aren't the typical riot spots. It's because they're running out of food. The price of food has gotten so high. The price of energy has gotten so high. And just like in the US, I know the Federal Reserve doesn't look at CPI. They want to do X food and energy because it's so volatile. But if you're in the bottom 50, 60, 70% of America, and by the way, that means you're in the top 1% of the world, food and energy is a big damn deal. It really is. I mean, I live in Puerto Rico. You know, I'm one of the lucky ones. I came from the wrong side of the tracks in West Texas, but you know, somehow or another managed to scrabble through. But dear gods have mercy. My wife, we throw a big party every New Year's Day. I do chili, she does black-eyed peas, and we had all of our neighbors and friends in, and she puts bacon in the black-eyed peas. It was $12 a pound here. It used to be $8. I remember buying it in Dallas 4 years ago. It was $2.50 a pound. So, I mean, food, did we buy it? Yes. Did it change our lifestyle? No. But if you're not in that group, yeah. I mean, I thought the most tone-deaf thing, and interrupt me anytime you want here, Adam, because I can just ramble on. But Lael Brainerd's I thought it was a fascinating faux pas. She says, well, people are going to substitute tuna for caviar. Really? Number one, I don't like caviar, but number two, and I love tuna, but tuna's expensive now. It's just, the Fed has lost the narrative. They've lost the extreme, and they're going to be forced to put us into a recession. I am one of the few that believe Jerome Powell is serious, and Lael Brainerd and a lot of the others, when they say they're going to raise rates and they're going to fight inflation, none of them want to be, and most of your readers at their YouTube, they're young, so they don't remember Arthur Burns or George, or Miller, who were the Federal Reserve chairman in the 70s. And Burns, from the 60s to 70s, said everything's transitory, and all of a sudden we have 14% inflation that was transitory, and you had to have a Volcker. None of them want to be Arthur Burns. They don't want that on their watch. They're going to hike rates more than any of us can contemplate right now. And it is going to create a recession when we have tight unemployment, when the entire world is shifting, entire United States is shifting how they want to be employed. I mean, pardon me, but if you look at the data of how many people have changed their jobs, changed their aspirations, changed how they want to live, they've moved. I mean, literally picked up their stakes and they've moved somewhere. And they've said, I'm changing my lifestyle. COVID changed everything. And then we threw the damn Ukraine-Russian war in on top of that, and we're changing things again. To think that we don't go into a global recession on this is just whistling past the graveyard. I'll let you jump in, Adam, because I got way too much on a rant there. I'm sorry.
Yeah, no. And I'm only going to interrupt because there's so many threads that you're pulling here that I want to tease even further.
Yeah, you have got to interrupt and keep me on track, because I get on a rant and I just go. So interrupt me all the time.
All right. Well, like the rants are good, so don't worry. I just got to start by saying though, if you're the most optimistic guy in the room, we're in a little bit of trouble here. Because
Well, no, I'm optimistic about technology and humanity. I'm optimistic about all of the drugs we're going to get, all of the new technology we're going to get, all of the energy. I mean, I'm optimistic about humanity. We're things are actually getting better, except for government.
Yeah, and I say that somewhat tongue in cheek, and this isn't exactly what you're saying, but it's sort of the spirit. There's an old Winston Churchill quote where he said, "I love Americans. You can always count on them to do the right thing after they've exhausted every other potential option." And it's kind of like what we're doing here, where in the end, I think we'll probably get to the right place, but we're probably going to muck it up an awful lot in between now and then because of just poor decision making.
You're absolutely right. That's a great quote.
All right, so lots of things. First off, I want to recognize and compliment you for you and your wife putting together what I believe is called Hopping Joe on New Year's Day, which is that meal where you have the black-eyed peas and you have the collard greens and you have the ham and whatnot, which is this very old, at least American tradition of some people call it prosperity stew, where you eat it in New Year's.
I did 5 gallons of chili and we did not have we didn't even have an ounce left.
Yeah. Well, all I'm saying is my wife and I do a much smaller version of that on New Year's. But you're right. Like we call it prosperity stew, but you have to be prosperous these days to afford to be able to make it, like you said, because the ingredients have just gone up so much. So you talked about, I mean, really, and I've mentioned this in several recent videos here. We had the Arab Spring in 2011, where you had fuel and food costs in these developing countries in North Africa and the Middle East. They went up dramatically, and all of a sudden you had huge swaths of the population that couldn't feed their families and heat their homes or drive their cars, and they really had no other option but then to rise up against whoever was in power. We're now beginning to see that, but on a global scale, as you said, right? I mean, the list of countries is everywhere, right? It's Peru, it's Indonesia, it's Sri Lanka, it's Greece, it's Spain, it's Morocco. You just type, food riots into Google these days, and you come up with tons and tons of countries. So it's a huge issue. You mentioned all the other things that are exacerbating that, like the Ukraine war and the embargo on Russian commodities and all that stuff. And everybody knows that we're dealing with, very hot inflation, 40+ year high inflation right now. So I want you to help paint for our listeners here the path where we go from today, where we're all laser focused on inflation. The Fed is saying, yep, all right, we're going to get super serious about it, to where you feel we're headed, which is recession. And we will probably go through an arc from inflation to disinflation and maybe into deflation. I'll let you say whether or not you think we're going to get there or not. But how do we go from today's concern all about inflation to this very recessionary future that you're worried about?
Well, first of all, recessions are normally a result of a monetary policy error. And the monetary policy era was created almost a year and a half ago now. I mean, I was writing about it, and I've been critical of Larry Summers off and on over the years. But you have to give him his props when he came out in February and said, if you pass this $2 trillion stimulus bill, we're going to have inflation. And I agreed. I'd already been saying that. And that's what happened. So the government, it wasn't the Fed. The Fed helped. They were aiding and abetting, but the government created the inflation. Now, so now we're not going to get any more stimulus. And so the government, Congress is saying, well, we created this. We're part of the problem, but you, Federal Reserve, have to fix this. Well, the Federal Reserve can't create more energy. Biden is clamping down on that. I mean, the whole GSC, we've got to clamp down on energy and not fund it. I'm sorry, GSC, ESG. We've got to starve these companies. That's the wrong policy. mean, one of the things that when I talk with executives in the oil industry, big guys, I mean, not wildcatters, they can't go to BlackRock and get funded anymore. They can't go to Blackstone and get funded anymore. The pension companies have so much pressure not to loan them money, which it used to be they just would give them all because it was money good. You're gonna go drill oil, and then you're gonna pledge that oil that we're gonna get. So we'll loan you money at whatever percentage. Well, now they're being pressured not to. So and the shareholders want their money back. So the Fed raising interest rates isn't going to help that. The Fed raising interest rates isn't going to help fertilizer or neon gas that we need out of Ukraine, which is 40% of the world's neon, which you have to have for computer chips. I mean, we don't think of neon as something that, comes up on our radar screen. But if you don't have it, you can't make a computer chip. These things take time. Can we fix it? Yes. Can we resource stuff? Yes. A year, 2 years. Can we create more LNG terminals in Europe? Yes. 2 years, 3 years. I mean, all of these things are not going to get
very
solved
least,
by the Federal Reserve raising rates right now. They can help bring the housing prices down. Let me see if I can help the readers understand. Quantitative easing did not create inflation in the sense of what we think of inflation as in prices in food and yada, yada, yada. In housing it did, but quantitative easing created asset price inflation. And nobody gets upset when their stocks go up or their housing prices go up. We're happy. The stimulus from the government created the inflation. The spending from the government created that, and that's going. So to think that when the Fed starts tightening, that it's not going to have an effect on the markets when they start reducing their balance sheet, when it clearly had an effect going up. I think that's kind of wishful thinking. It's just an upside down world. And the Federal Reserve has the awkward position of somehow in the mindset of America, of the average American, being responsible for inflation that they weren't responsible for. I mean, they were really wrong. Dare I say the word stupid to not be reducing their balance sheet and raising rates a year ago, which was what Summer said. And I'll let him. I've been saying this all along, but it's just John Mauldin. Who cares about John Mauldin? But Summers did take a couple of victory laps in the Journal and the Washington Post, kind of saying, well, I told you so. And now it's going to be it'll be a hard road to get to a soft landing. But he was basically saying, if you read between the lines, there's not a snowball's chance in Hades you're going to get to a soft landing. So that's where we are. Now, by the way, I'm 72 years old. I think I've lived through 8 or 9 recessions, and the operative word there was through. We always get through a recession. We always end up getting bigger. Things come back. It's not the end of the world. So don't get all bent out of shape. Oh my God, we're going to have a recession. We're all going to die. No, we're not going to die. Some of us may have to restructure how we live, but we've already been doing that. So that's where we are. Interrupt me.
All right. Well, I'm going to interrupt you right now. And I think this is an important point to underscore, which I think this is where the nation sort of lost the script, I don't know, about 20 years ago, where they just decided that recessions were bad and we should do everything possible never to have one again.
Yes.
When really it's just part of the natural cycle, right? And just like any cycle, if you try to suppress it, it eventually comes back, but it comes back in a much higher magnitude because it has to make up for all those years of suppression, right? So we may have a particularly painful recession here. I mean, could be wrong, who knows, but hopefully it will happen and end and bring us back to a better baseline. So to your point, we shouldn't really fear the corrective process that's trying to happen here. So a couple of things. So you mentioned basically that the stimulus the stimulus that the Fed has been providing over the past decade has driven up the prices of financial assets. They've now stopped that. You mentioned that you believe that the Fed is going to be more serious than a lot of people are giving it credit for. So therefore, if they're taking away, the support that brought asset prices up to their current heights, you would then expect them to come down to a certain extent. What's your outlook for the markets from here?
Well, by definition, if the Fed's taking that away, I think the market's going down. I think we're going to go into a bear market. It's going to create marvelous buying opportunities. I mean, there is a point at which, when Cathie Wood is at her everybody's peak hate moment for Cathie Wood, okay? You want to go in and buy ARK with both fists. Now, I want to buy her specific favorite stocks with both fists. She's the smartest person. Her team is. We've interviewed each one of her 15 analysts. Okay, I mean, literally, my team has done that. And they're brilliant. What they've gotten on was the wrong side of a frenzy that drove everything up. Not unlike my friend George Gilder back, if you remember George Gilder back in 1999 and 2000, who was talking about how Qualcomm is going to the moon and all these other stocks are going to the moon. And by the way, they've now gone to the moon after they went down 90%.
Yeah.
So Cathie Wood's going to be right, but not for a while. The energy, I don't want to buy, I mean, you can buy oil stocks. I think I actually want to buy oil production. I mean, literally, go find me some guys that will drill for oil and get me into their wells. I want to own that oil. I want to own that production. I want to own stuff that's coming out of the ground that if you dropped it on your foot, it would hurt you.
It hurts. Yep.
The
hard assets.
There's this is going to be a marvelous time. I mean, I'm involved. I've invested a great deal of my money into a company that has figured out how to teach a plant to evolve so that it can be, Roundup resistant. It can be disease resistant. It can be more productive. It can use less fertilizer. It needs less water. I mean, it can be more nutritious. I mean, it's literally going to change the way we all buy seeds. That's good for the world. It's going to make our food so much cheaper and better and more nutritious. That's wonderful. It's not public yet, but it will be. Bank of America will take them out in the next year or so. So there's lots of good stuff happening. But in the meantime, I don't want to be long any index fund. I think my line is, friends don't let friends buy index funds.
Okay.
Okay. So just don't do it. Just, you're better off. This is going to be the decade of rifle. I want that stock. I don't want that index. I want that stock. And if
I'm going to interrupt you just for a second.
Buy a stock, then find somebody who is, pay them 50 or 75 bips or whatever they charge, and find the smartest guy in the room to buy stocks for you.
All right, I'm going to interrupt you here only because that's, again, a sentiment that's been echoed a lot recently on this program, which is, leading up for the past decade, it's kind of been a rising tide lifts all boats kind of scenario where you had this massive stimulus going in, pushing kind of everything up. we then got to this sort of mania stage you're talking about, right? A lot of people have called it the everything bubble. So if you just sort of threw a dart and picked any general sector index, you made money. And people are now saying in the environment that we're heading into, you're going to really have to do your homework. Active investing is going to become a lot more important. You're not going to be able to just pick an index and ride it. You're going to have to find the good companies inside that sector, and then also look at their current valuations to see if they're well valued or not, and be laser focused like that. So it sounds like you're of like mind.
Yeah, I mean, go back to the 90s. Everything worked up until April of 2000, when it didn't. And for the entire decade, which I was writing in 2000, I said, the entire decade, we're not going to make any money for this decade. Stocks will be flat. We literally compounded 1% for the decade of the 2000s. And then we had the boom. And everything worked again, just like the 90s. We're now getting ready to go into a decade where I don't think indexes are going to be much better off today than they were, at this peak here. But if you go to the 90s, and if you were selective, oh dear gods, simply picking dividend stocks, rising, growing dividend stocks, you outperform the market like 6-7% a year. I mean, just as something as simple as that. And if you got selective and said, what does this company do? Why do I want it? What's its price at? You could radically outperform. And so it's only been in this last decade where active money management has now been turned on its head. Nobody wants an active manager. I should pay Vanguard 25 basis points just to put it in an index fund. And so, okay.
All right. Well, then this is exactly the point where I want to pivot now to start talking about your conference that you have coming up, because you have, I think, 52 of really some of the all-star experts that are out there. I can't sort of think of a better environment to learn, where those sort of specific, interesting opportunities are than in an event like this, where you've got that many really smart people who are coming together for the idea exchange and to sort of share what they are, how they're allocating their capital right now. So what can you tell us about sort of first why you started the Strategic Investor Conference, because it's been going on for a long time, and then if you can just sort of share some of the details about this year's event.
Yes, we've been doing it a long time. I remember our first conference had 150 people at it. This was in La Jolla. And my business partner, one of them at the time, when I was walking up to do the final speech, he says, John, it'll never get better than this. Don't screw it up. But he didn't quite say it. He said it more bluntly than that.
Okay.
And
but it'll never get better than 150 attendees, is what it says.
And the moment, because we had all these great people that we'd pull together, and as it turned out, every year for 18 years has been better than that moment. This year, the faculty we have is incredible, and because of the environment that we're in, we've reached out to people that are not normally in people's radar screens. I mean, I've got a former deputy commander of NATO coming in, and he briefed us privately here last week, and it's not what you're hearing. We've got maybe a former Secretary of State coming. We've got, Ron Barron. There's so many, so many really, really successful people and billionaires. We've got some of the best money managers in the world saying, here's how we manage money. And we're going to put them in the same panel with each other and say, here's why their policies aren't, these are all people running 3, 4, 5 billion. Okay. So here's why their process is right and is wrong, and my process is right. We're going to get into that detail. I've got, Peter Bugvar and Bianco and people that if you're on Twitter, you're recognizing, but we've got people you've never heard of that are the experts on what they do. I mean, I can't even, I'm not allowed to say it until they do it, but it's like one of the most important commodity in the world, he's the single biggest trader in that commodity. And he's coming from the biggest commodity trader in the world. And he's been allowed to come onto our stage.
So, John, I'm going to interrupt just for 1 second. I want you to keep on going here, but let me just tell folks, while we're talking here on another window in your browser, go to wealthion.com/SIC, because that page has all of the 52 guests that are there. And there are a couple that John's having to be a little delicate here for marketing reasons. We can't necessarily mention their name.
Well, no, it's legally, I can't expose their name and their company.
Right. So that's one of the reasons why John's being a little cagey here. But if you go to that page, you'll actually see the names that are there. So, John, sorry to interrupt you, but I want people to be able to get that immediate specificity of who it is.
Now, final day, we got Felix Zuloff, former Barron's Roundtable guy, arguably one of the greatest investors and traders of all time. Tom Honig, who was at the Kansas City Fed. Bill White, who was the chief economist for the Bank of International Settlements, who is a conservative, my favorite all-time central banker, who is really critical of the central banks right now. They're all going to speak, with Danielle DiMartino and Lacey Hunt interviewing each other. That final panel is going to be killer. It's just, and by the way, it's 5 days, but it's every other day. You get a video, you're going to get a transcript, you get you get an audio, so you can consume it at your leisure. You can read it 2 or 3 times. It's really geared to be consumer friendly, consumption friendly. And it is, honestly, it is the single best investment, macroeconomic, geopolitical conference in the country anywhere.
Well, and I just want to add my 2 cents to that, because this is the world I live in, and this audience is with me every week as we bring on, great guests every week here. And we try to get the best guests that we can, several of whom are going to be at your conference, but you have a bunch of guests that I have yet to be able to pull into this orbit because they are so high up on the food chain. Like you're talking about, former secretaries of state, former, Federal Reserve presidents. You've got people there that are managing many billions in capital. And there are a couple of names that if I mentioned, everybody would know them. But again,
because they're on TV all the time.
Yeah, but there's a lot of people out there who have opinions, or there are a lot of analysts out there that they write their reports and then they go, they become talking heads to tell people what they think. But your event is basically packed with the doers, right? It's packed with the people who are, coming up with a policy or actually running the major funds that have to determine how these billions are going to get allocated, right? And, every viewer is not going to agree with everybody that's there on the panel, but what you can guarantee is that the information you're getting from the panel is the information that the people who are making the decisions that impact the rest of us, are dealing with.
And it will help influence you and impact your thinking on, how do I want a position? I mean, I don't see this as a moment to be afraid. I see this as a moment to be, oh my God, I get to reposition, I get to buy cheap stuff, I get to do things. This is an opportunity, and it's going to be a generational opportunity. Oh, by the way, we were doing a pre-conference thing with Frank Luntz yesterday, who's going to be on for an hour talking to us about, like he does, politics. And he was real blunt. He says, how, what do you want me to say? Because normally when he's on TV, he has to be very cautious about what he says. And I said, you can be as blunt as you want. He says, can I say this, this, and this? And I go, Well, you can't say that latter thing, but you can't say the others. So we're billing this as Frank Luntz Unplugged. But all of our guests, there is no filter. You're getting their views. There's no, we're not trying to be politically correct. Some of them will not be politically correct on both sides. Okay, I mean, we this is not we make a very good point of bringing in everybody and having a cautious, courteous debate.
All right. Well, look, and for the folks that are watching and saying, hey, wait a minute, is Adam just turning this into a big commercial for this conference? I mean, I kind of am, but the reason why I'm doing so is because it is such a rarefied event. And to the point you just made, John, given the timing, so Wealthion does two conferences. We do one in January, we do one in September. We're gonna do our own online one in September. But given where we are in the timeline right now, like the world's going to be probably quite different in September than it is right now, and we're right at that transition point where we're going from kind of the world we've lived in to the world that, John, you've just been talking about earlier, is the world we're going to be entering. And you have this important moment right now to hear from all of these people that are basically making the decisions, what they recommend, what they counsel doing. And so I think it's, incredible access at an incredibly important time where, people still have some time now to take, positions before a lot of the stuff you and I, talked about earlier is going to start cascading and happening here. John, I forgot to mention earlier too, you don't just put on this event, you write, phenomenal newsletter, keeping people abreast of, what's happening. So whether it's before this conference or after this conference, you're there steadily giving people audible calls on how things are unfolding. Can you tell us a little bit about that and where people should go to learn more?
Well, you can just Google John Mauldin. It'll come to Mauldin Economics. Click on Thoughts from the Frontline, and you can subscribe for free. And you become one of my 1 million closest friends. It does have a wide following around the world, and it just built up over the last 22, 23 years. Unfortunately, everything I've written for the last 22, almost 23 years now is still up, and you can see every mistake and faux pas that I ever made, but you can see a few good calls as well. So
no, I mean, John, look, you're being modest. You've been doing this for a long time. You have a massive following for a very important reason. You're very prescient and very connected guy as well. Well, look, as we wrap things up here, and when I edit this, I'll put up the Mauldin Economics link on the screen here so folks know exactly where to go.
Awesome.
But in wrapping up, I know you're going to dig into this in the conference, but what kind of, I know in general you said, look, you think lower prices are ahead, so you're not necessarily going to be buying a lot at today's current valuations, but are there any sectors or asset classes right now that you think are good for folks to consider as we enter this more turbulent time going forward?
I think you need to be looking at and exploring where you want to be in biotech at this point. I mean, because we're gonna see nobody's able to call the bottom, but at some point there's going to be value. At some point, technology is going to be a screaming buy. At some point, dividend stocks, when dividends go up by 1 or 2% because the stocks have gone down, companies that have raised their dividend every year for 20 or every quarter, every year for 20 or 30 years, those are good values over time for long-term holders. You want to start exploring those. And if you don't have somebody that can do that, then find a money manager that can. We do that, but there's lots of money managers around. This is the time to be doing your homework so that when the moment happens, you can go, bam.
All right, great. So to restate that, this is the time to put together your shopping list, kind of identifying the best of the best for long-term prospects, and then be poised so that when there is that sort of blood on the streets moment, you can get in at low valuations and then ride that.
Yes, and by the way, just so everybody will know, I'm not in cash. unfortunately, I have too little cash. I'm actually trying to figure out how I can get some more cash. I've got to redeem some things. I am long several stocks. I mean, it's rifle target stocks, and I'm not selling. I don't care what happens because I've bought them for 10 years. If you looked at my portfolio, you think I'm the most aggressive guy in the world. So now I've got a lot of hedge funds, and to me, a hedge fund is a bond. It's boring. It gives me my average hedge fund return over the years, the last 14 years, has been 9%. Okay, as a group, that's boring, but I like boring. So I mean, there are ways that you can find it. You don't have to be a gazillionaire to get into them. You can actually get into them for not that much money. Fintech has made all of this stuff possible these days. The world is changing, and if you haven't updated your view of what is possible out there, then you need to go explore some.
All right. Well, I think that's a great sort of lead into, what's a great way to explore that? Well, go listen to all those experts that are there in your conference here. So, John, I'm going to thank you so much for giving me so much of your time. I'm going to remind people to learn more about the conference. Just go to wealthion.com/SIC. You'll see all the details there. Also, I think I don't think I mentioned this earlier, but I think if you sign up now, you guys are offering a pretty substantial discount. I think it's something like 44%.
Something like that. I know that my team worked out something with your team, and so we want all your people to become part of the joint team as we explore and go into the future together.
Great. And then also too, folks, if you've enjoyed, if you hadn't known much about John before this conversation here, go check out MauldinEconomics.com as well. John, well, look, I really am looking forward to the conference. I just realized I don't think we gave people the dates on it. So it's in early May, right? What's the first day of the conference?
May 2, 4, 6, 9, and 11. So
all right.
Monday, Wednesday, Friday. Starting about 10:30 Eastern time, and then going to 4 or 5, and then the next Monday and Wednesday.
Okay, great. So and that's a crushing boatload of content because there's so many speakers, and that's the whole point of the event.
That's why you can you'll get a password. You can go in and watch it at your leisure. You can watch it at night. You can watch it the next day. You don't have to sit and stay glued to your TV or screen if you don't want to. A lot of people do. And we provide transcripts so you can read it. So
great. And that's where I was going. You can get written transcripts or watch the replay videos whenever you want to afterwards, right?
Right.
Awesome. All right. Well, look, John, again, thank you so much for taking the time to do this, especially when you're working so hard, to produce that conference when it's right around the corner here. But thanks so much. Really look forward to connecting with you live there, and just best of luck with it.
Let's do this again sometime, and just, let's sometime later after we've gone through this, and let's go back and say how right or wrong I was. Call me out on it.
Look, I'd love to do that, whether we're calling you out or patting you on the back. I just want to bring you back and bring your continued insights to this audience. So thanks so much, John.
Thank you.